Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of January 16th through January 20th, 2023, where we'll see if we're going to get the January effect in 2023. You can see via this graphic that typically or historically, January has been a positive month, more so than other months. So again, we'll take a look at how the markets performed last week. We'll strategize, we'll do our market analysis, and whether we can expect a historical January effect in 2023. Thank you for joining us in the live stream today. Ollie in the Bay, Flip of the Shippa, glad to see you. I hope all of you are doing well already this January. And again, we'll see if we can expect a typical positive month in January in 2023. So we'll get started. So here's our Google document with our notes for part one of our weekly trading game plan for this week. You should be able to find a link to this publicly accessible Google document in the description box below. We store these, the notes for our weekly trading game plans in a publicly accessible Google Drive folder, so you can reference them, as well as notes from our previous weekly trading game plans in that Google Drive folder. And again, you should be able to find a link to that Google Drive folder in the description box below. We've got links to bonus videos, the tools we use for our weekly trading game plans, etc., in that Google document. So again, we'll talk about, can we expect to see a typical January effect for 2023? If you're not familiar with what the January effect is, what's the historical data behind it, some strategies for playing the January effect, and again, towards the end of this live stream, the end of this video, we'll talk about other strategies on how to make money trading the January effect. But we have a standalone video that you can access that explains what the January effect is, what's the historical basis for it, and again, some more trading strategies on how to make money trading the January effect. So again, we would highly recommend you also view that video to get a better understanding if you're not familiar with what the January effect is. So now we'll jump into FinBiz. We'll start looking at how the markets performed the end of the week. And as we can see on Friday, all the indices were up. They started a little down and all ended up at the end of the week. We got more advancers than decliners, 2/3 advancers, a lot of new highs. Now we've got 75% above their 50-day moving average, but we're still split between about 50-50 above versus below their 200-day moving average. And we could see the end of the day turned out bullish. So ending this week was bullish for all the indices. Good morning, Alan Krantz. Thank you for joining us as well. Glad to see you. Hope you're doing well. See, most the heat map shows, most sectors had some greens or some, standout reds, and we'll talk about also how we're starting to enter the earnings season. So earnings matter again, and we'll talk about the earnings calendar as well. Ricky Khan, thank you for joining us. Glad to see you as well. So here in the news, you see we're starting into earnings season. We're starting to see, earnings matter. So companies that miss expectations are going to get punished. Those that beat expectations are hopefully going to get rewarded. We see some of the futures. We'll talk about this when we look at the futures charts in FinBiz as well, but we see oil push back up over 80, natural gas still declining down below 350 now. See gold's been making a run up over 1900 now, and we'll look at where gold might be headed. And again, we see all the indices ended up. Saw the treasuries, the yields were down quite a bit. We can see they're still quite a bit below 4%. We see it's still inverted. Again, when we look at the futures, we've been talking about treasuries relative to the Fed interest rates and how yields really need to push up towards the Fed interest rate expected rates, but given the reaction to the economic data that we've gotten, the yields did push down, but they did pop back up a little bit on Friday. We've seen the dollar's been declining, so we see the euro to the dollar is now at 1.08. Pound to the dollar looks like it dumped a little bit at the end of the week, but again, it was generally positive. We'll look at each of the indices. Welcome, Easy Mike. Glad to see you again. Walter Lyons, welcome. Thank you for joining us. Hope everyone's doing well, keeping warm. So if we look at the SPY, we see two sets of trend lines. So we've got, a declining channel here. We'll zoom out in a second. A longer term declining channel, and then a shorter term upward trending channel. And we see it's respecting those trend lines pretty well. It's bouncing off the lower trend line. We've got this resistance about 410, and again, that's getting rejected off that resistance. So we're approaching, that narrowing wedge for the SPY. And again, the longer term trend is down, as we'll see. So again, we're still below the 50-week moving average, and that's acting as resistance. We're now a little bit above that 20-week moving average, and that's acting as support. So again, we're kind of oscillating into this wedge. Again, the longer term trend is still negative. So, you would still look at this as a bearish market because we have yet to make a higher high again. So again, our strategy is still we're in a bear market. We apply the strategies on how to make money trading a bear market, but we do get these bull rallies within the bear market, so we play those accordingly. We look at the NASDAQ, at the Qs. Again, very similar, although it's, well below its 50-week moving average, and the 20 is providing some resistance. So it looks like it tried to pop above that 20-period moving average and didn't quite really break through that. Again, we're still in a bearish market in the NASDAQ, although, we might have a bottom somewhere in this, 215, 254-ish range. Look at the Dow. Now the Dow's been outperforming, and it's finding support around its 50-week moving average. So has yet to make a higher high. That will provide a resistance area, but it is outperforming the other indices. We'll look at the Russell, IWM, and very similar to the Dow. It's trading more sideways, tried to break out. Didn't really make a definitive breakout, so we'll have to see if it gets rejected off that 50-week moving average and declines back down and further oscillation or not. But again, as you'll see in our video and the articles on the January effect, small caps, particularly the underperformers from last year, tend to outperform due to the January effect. So that's, again, a historical trend that we'll see. Let's look at the VIX. Well, I'm going to talk quite a bit about volatility and what we saw relative to the economic data. And then also, if you come back tomorrow for part 2, we'll talk more about some of our strategies about how to trade the VIX in more detail. So we had the CPI data, and we kind of expected, and we'll talk about this more tomorrow, how about we traded going into the CPI data. It wasn't really worse than expected, and so we saw what, in my humble opinion, was an unwinding of people that were a long volatility going into the CPI data. We also had the Powell speech, which tend to be pretty much a non-event. So again, I think what we see this steep decline in the VIX was, in my opinion, again, was people unwinding their positions, going long into volatility into those potentially catalyst events, being the Powell speech and also the CPI read. Now, that's pretty steep unwind. We haven't seen, um, the VIX below 20 in quite some time, back since early 2022. The VIX right now, I think it's sitting in the 18s. Let's see, right now the VIX is sitting at 1835. So I'm going to zoom this out a little bit further because we haven't really seen, VIX that low. Well, it was 16 back in late of 2022. So again, we haven't seen the VIX this low since early 2022. And again, we'll talk more detail tomorrow about how we're trading volatility going into the Fed interest rate decision and also the economic data that's coming up this week. Just a reminder, all of this is my opinion. None of this is financial advice. This is all for educational and hopefully some level of entertainment purposes only. So Alan says, in bear market, I thought steps upward, elevator down. Yeah, and that's just in any kind of market. That tends to be how things go. We stair step up and we take the elevator down. Now, in a bear market, you get these, more violent bull rallies, right? So when you get a violent reaction, it's just like the inverse of a bull market. In a bull market, we get a violent, downward reaction. In a bear market, we get a violent upward reaction. So that's why in a bear market we say, sell the rips. In a bull market, it's buy the dips, right? So let's look at some of the groups and industries for this week. So again, we constantly see this rotation. We saw rotation out of utilities, out of real estate. Basic materials is doing well. Consumer defensives got a rotation back into defensives. Some healthcare rotation back into healthcare. Again, rotation into consumer cyclicals and technology. Again, this is a risk-on reaction to the CPI not being worse than expected. Again, for the week, basic materials, real estate still did pretty well. Energy was pretty neutral. Again, we've seen this rotation in and out of energy pretty reliably. But for the month, again, technology and healthcare are some of the worst performers. Basic materials, again, energy, top performers. Financials, again, we got some of the banks reporting end of last week, and there was initial negative reaction, and then they recovered, and the reaction ended up being positive because I think they pretty much all beat their estimates or beat expectations, all the major banks that reported the end of last week. So if we look at industries for Friday, see again this rotation in and out of coal. So coal's either at the top or at the bottom typically. Saw the rotation back into aluminum, rotation back into solar. Again, they're rotating in and out of solar. So again, if you're a short-term trader, day trader, momentum breakout, etc., there's plenty of these sector rotations that you could play, make good money on these rotations in and out. Gold's performing well. Silver underperformed a little bit, but again, when we get to the futures, we'll see. I think there's more opportunity, more upside potential in silver right now. See some of the REITs underperformed, and aerospace and defense underperformed on the political issues with budget, cutting their budget or holding their budget steady, along with debt ceiling, potential issues with the debt ceiling, government shutdowns. So Flippa says earnings, he thinks earnings are going to be bad. I'll talk a little bit about that in a few minutes. just again, my opinion. So for the week, again, aluminum, solar, rotation into those. Copper did well. We'll see that in the futures. Airlines. And the worst performers, getting some defensives and defensive stock, consumer defensives, and then also aerospace and defense. Again, this is a sector rotation out. The consumer defensives sector had been outperforming, and I'm sure we saw some profit taking, a rotation out of that. Yeah, and that's a good point too, Alan. Is the general CPI data wasn't worse than expected, but there's some segments, that are still high. Well, inflation's still high in general. It just isn't going up any faster than what people had feared. So let's talk about the economic data, and I'll let the calendar come up a second, and I'll just talk about some of the highlights I noted. So Tuesday, everybody was prepping for volatility, potential downside on the Jay Powell speech. Pretty much became a non-event, or some people called it a nothing burger. He didn't really say anything about expected interest rate hikes or the state of the economy, or really, again, it was pretty much a non-event. So people were prepping for volatility, potential downside, and it was pretty much nothing happened. So they moved on from there. Wednesday, mortgage rates declined a little bit. That gave a little bit of boost to the housing, although it's still, the housing sector is still in recession. This is very interesting. Easy Mike and I have been talking about this in the Benzinga chat. We tend to watch the oil and natural gas inventory data, et cetera, and trade some of those energy sectors. And I've been mentioning that I don't think anybody's paying attention to the inventory data anymore, because we see these inventory numbers. In this case, oil came out with a much higher build in inventory than was expected. Expected was negative, had a huge build in inventory, and yet the oil price advanced, went up, and now it's sitting at 80 again. Again, in my opinion, it's been bouncing between 70, 75, 75, 80, getting rejected from 80. We'll see if it breaks down from 80, or again starts to decline back down from that resistance point on 80. And yeah, I think they're trading, what we've been talking about is they're trading oil and natural gas off technicals. When it reaches an extreme low, it bounces up, extreme high or resistance level bounces down. And I don't think that these inventory data, I don't think anybody's paying attention. Although this refinery utilization could be one reason why we got an increase in oil prices. The refinery utilization is down more than expected. So then Thursday, we got the CPI and jobless claims data. The jobless claims initial or continuing is actually less than expected, and down from a previous. So some of these people are either giving up or they're finding jobs. Then again, we got the CPI data, and essentially it just wasn't any worse than expected, and people really reacted to this negative 0.1 month on month, and that's so negligible. It's pretty much saying, okay, inflation isn't going up anymore, so it's pretty stable now. It's 6.5. It's slowly declining. And then you had Biden come out and cheer the inflation's coming down, etc. It was very interesting. I was watching the volatility in the markets while Biden was talking, and the longer he talked, the higher the VIX went, and the market turned over and started going down. As soon as he stopped talking, the VIX started declining again. So I thought that was kind of interesting. And again, initial jobless claims was less than expected. Now, both of this and the continuing and the average jobless claims. This all tells you that the employment market, the job market, is still very resilient. Now, in the past, that has been an impetus for a reaction that that's going to allow the Fed to be more hawkish. And again, inflation's not really coming down rapidly, and so the Fed can still be hawkish. And I think people right after this data came out, they started talking, oh, the Fed's going to only do 25 basis points. Now, I think there's a risk there that if the market positions, leans too far in that direction and the Fed comes out with 50 basis points, which is still on the table, and there's, reasons, justification why they should do 50 basis points, the market may be caught off sides and we might get a violent negative reaction. So again, all that's my opinion, but I would position accordingly. We'll look at the consumer sentiment data on Friday and investing.com. It was more positive, so it is improving. And again, that might be some of the reason for the upward trend on Friday. Just a quick reminder, all the markets are closed on Monday in observance of Martin Luther King Jr. Day, so you get another long holiday weekend. Also, just a reminder, and again, we'll talk about this more tomorrow as well, is these long weekends, we tend to get we always get a little boost in the VIX on Mondays after a weekend, and long weekends tend to give us a little bit more of a boost in the VIX. So again, we'll talk about how we're trading the VIX volatility more tomorrow. Wednesday, another potential volatility event. We have PPI data. So this is producer price index. So this is the front end of the supply chain. Again, if this comes out, hotter than expected, that could really reverse the reaction that the market took on the CPI data. And just again, reminder that this Friday is the January options expiration. So there's another volatility event. And also, if you have any options trades, again, the monthly expiration is on Friday. And then we have the next FOMC meeting. Is the actual decision date is February 1st. So again, we'll be talking about that. And again, you hear some of these Fed officials are coming out and talking, and they're kind of all over. Some are more hawkish, some are more dovish, etc. And that does trigger the market a little bit. So we're going to continue to see that till they hit their quiet period. And Easy Mike points out that Thursday is the expected debt ceiling. There's some drama. Again, my opinion, they might even shut down the government for a couple days. But eventually it'll get resolved. They'll raise the debt ceiling. They're not going to let the government default, although again, they'll potentially increase fear. If the market reacts, that might cause increased volatility and some downside. So let me grab a drink and we'll look at the detailed economic calendar and then what's coming up next week again. Okay, if I just see if I missed anything. Oh, this is interesting. Consumer credit, is increasing. I think I heard it's either at or near an all-time high. We kind of we've been talking about that, what we expect going on. Let's see, wholesale inventory is pretty much in line. And boost, large increases in crude oil stocks, inventories, and yet the price went up to 80. Also, natural gas storage, same way. They were expecting a decline. We got a build, and initially there was a little pop in nat gas prices, but then it did continue to decline. And again, I don't think that's trading on the data. I think it's trading on technicals. Also, we've been talking about the warmer than expected, winters, and if we get a snap, that might cause some reaction. So here's the Michigan consumer expectation. So it was only expected at 59.5. It was 62 and 64.6. So that was positive. Inflation expectations was down a little bit. Oil rigs count went up a little bit. So again, more supply, but the price went up. So again, I don't think that data is dictating the pricing right now. Here's what we've got next week. Again, not much Monday. Again, we still got FOMC people talking. Then Wednesday, we've got PPI data, producer price index. So that they're expecting that to come down. If it doesn't, that could cause a negative market reaction. Got some retail sales, industrial production, inventories, and then jobless claims. Typically on Thursday, we get our standard oil and natural gas inventory data. Again, more FOMC. We get some housing. And that's so not a whole lot, but a few events that could cause some reactions. So then let's also talk about earnings season. So we're just in the start of earnings season. So again, you can get the full list of who's reporting when. You can see, if you're trading any of these, when they're reporting. I believe earnings are going to matter again this year. And as such, I'm in the process of snipping out the last time we talked about how to trade earnings and how earnings matter and where you can find the upcoming earnings and the dates, etc. So that standalone video is under construction, coming out soon. But in the meantime, you can listen to those portions of our weekly trading game plan from last year where we talked about how earnings matter, how can you find out who's reporting when, the sentiment with related industries, companies in the same industry, how they tend to react similarly, and again, how you can make money trading on overreactions from the earnings. So again, it's worthwhile to know who's reporting. If it's here, we got some gold, etc., some biotechs. And again, these will affect the sector as a whole. We've got some airlines, Kinder Morgan, some miners, some more banks. There's Netflix, so the FANGs. I didn't see Spotify offhand, but I think they tend to be one of the first of the digital media type companies to report. There's Discover, etc. So again, Charles Schwab, so trading. And we'll also see the short-term earnings calendar in Webull as well. But again, recommend you listen again to our strategies on how to find earnings dates, track earnings dates. I also believe in that video I have how you can set calendar events in Thinkorswim so you can have it alert you when an earnings report that's important to you is coming, and that can help you then trade accordingly. So let's jump over to Webull and we'll look at the market screen. So just a quick reminder, if you're not already using Webull, they're still offering their 12 free stocks, each worth anywhere from $3,000 to $3,000. Again, as you can see, we use Webull for our market analysis, for a lot of our due diligence. We do the majority of our trading in Webull. And again, you get 2 free fractional shares for just opening an account. If you deposit up to at least $100, you get 10 more. And again, they're worth anywhere from $3,000 to $3,000. So again, if you're not already using Webull, Again, it's our favorite trading platform. Again, what we do, our market analysis, as you'll see, also our due diligence, and the majority of our trading we do at Webull. And again, we really enjoy the 4 a.m. to 8 p.m. trading hours, as that affords some unique opportunities to take advantage of trades at 4 a.m. So I'm typically up and around that time. So wave and say hello in our Discord if you happen to be around at 4 a.m. Yeah, it was cold this morning. It was cold on the beach this morning, Alan. So I was cold. We usually get about 2 weeks where it's windy and cold like this, and then it'll warm back up to the 70s. So it's pretty typical. But it was below 70, so in my opinion, that was cold. So if we look at the markets for Friday, again, we see more advancers than decliners, not quite 2 to 1, but almost. Vast majority of the advancers, though, was small, thin tails. So this week we got more NYSE inflows, and we still got some outflow out of the NASDAQ. Again, the past couple weeks, the NASDAQ had been outperforming, and again, now we're seeing an outflow rotation back out of the NASDAQ. So here's where you can also see the near-term earnings calendar in the Webull market screen. Again, this is the online browser version of Webull. On the market screen, you hit calendar earnings, and you can see what's coming up in the near term. And it'll say, after market close, before market open. So we see, Morgan Stanley's on the 17th before market open. So there's another bank. Look at the best performing industries for the week. So energy, so this is solar. I'm sure the rotation is solar, semiconductors, and tomorrow we're going to talk about a potential opportunity for trading semiconductors on this run. Transports did well, some equipment, some construction. Uranium, again, we've seen this rotation back into uranium. They've been rotating in and out of uranium. We're waiting for an opportunity we'll talk about tomorrow. In uranium, we see, one of our favorites ran up. DNN's one of our favorites. UUUU, we've traded both of those profitably. LU, all three of those we've traded profitably in the past. Metals and mining, pretty good. Some of the REITs did well. Auto parts did pretty well. And oil and gas. There's some biotechs, and we'll also talk about potential opportunities in the area of biotechs tomorrow. Okay, let me grab a drink and we'll look at ETFs as well. Okay, so right now we can see they're betting up on the NASDAQ, up on the Russell, up on the Dow, mid cap up. Yen up. There's the short on the VIX, so that went up because the VIX went down. Again, up on the Russell, up on small cap. We've been talking about this, potential opportunity in small and mid cap, and that's part of the January effect, and that's part of what you'll hear in that standalone video. And again, up on the NASDAQ. So again, not terribly surprising from the upswing at the end of Friday. Industrial's pretty well. Healthcare, communication services. Again, that's a rotation. It had been underperforming. Energy, positive. Basic materials, technology. Again, they keep trying to run, technology whenever they get the chance. So on the CPI data, it wasn't worse than expected. So they tried to run technology again. Consumer defensive. So some of these staples, small cap consumer defensives did well. Real estate generally negative. And again, we had some positives on some of the banks. So commodities, gas, oil, tin, that's interesting. Lead, total return, inflation hedge. And we've seen the 7 to 10 years been outperforming for a while. Got something in Asia, gold hedged. And pretty much all the foreign currencies, again, we saw the dollar decline, so these foreign currencies are performing better. So let's look at the futures, and then we'll talk about our strategies. So again, we see all the indices were generally positive, but again, they're still not breaking out to be a higher high yet. They all need to test that resistance to get to a higher high. Again, the Dow's outperforming better than the S&P, better than the NASDAQ, although the NASDAQ had that run. Russell's performing well. Again, it's approaching its highs. Nikkei, Europe, there was some comment that Europe might not be in a recession. Germany, okay, here's that steady decline in the VIX. We talked about that. Here's oil. Again, it's run up to 80. 80 seems to be a pretty heavy resistance. Again, we've got some resistance at 75, resistance at 70. So we'll see if it bounces back down. If it does break out, people are still talking 120. So we'll have to see if it stays in this channel or not. Again, we saw the steady, real steep decline in natural gas. Now it's down below 350. Just to look at a historical on natural gas. So when it broke down, around the 375-ish area, that's, broke through that support. Next levels of support are around, 247, 250, and then down around $2. So if it doesn't find support, bounce back up soon, it could continue to decline down to those levels. So again, we've had this position in cold for a long time. Recently, we put on an additional position to neutralize our nat gas position using boil. So we're essentially neutral, and we're using covered calls to make money just trading natural gas based on its volatility. So we see this run up in gold. Again, I wanted to look at these briefly. Gold and silver, show you kind of where the peak in gold's around 2,000. It really hasn't gone above 2,000. I'll even go to the monthly. So you can see how you can use these futures charts and FinViz to get, historical levels, even though the zoomed in chart may look, it's at a new high. You can zoom these out and then see, okay, where is it relative to its historical high? So you can see gold really doesn't go much above 2,000. It's sitting above 1,900 right now, so there's not a lot of room to run. Um, and essentially, my strategy in this area is when it gets to about 2000, assuming my like GLDI position, etc., is in the profit, I'll probably sell after I collect the next dividend on it if it's in profit around 2000, and then we'll probably be looking at shorting some gold. Now, there's opportunities here with some of the small miners, and we'll look at some of the ETFs related to those tomorrow. But again, I think the small miners are lagging. So I think there's some opportunity. I think they're still relatively cheap on the historical performance. So if you're interested in trading gold, you might want to look at some of the small miners or the ETFs for the small miners. I think JNUG is one. GDXJ is one that Easy Mike mentioned the other day, I believe. Now, similarly, if we look at that same type of chart in silver, we see silver sitting around 24. But if we zoom out farther, we see silver's got a lot more upside. So recent high around 30, and then, historical high in the, close to 50. So that's why I said I think silver's got some more room to run. Again, there's silver miners. A lot of the miners, the small miners, do silver and gold. So again, I think silver's got a little bit more room to run than gold does. We do have quite a few miners. We've got a position in SLVO, been collecting dividends on for quite a while. So we'll again hold these until they're profitable and it reaches a peak. And then, we might be again looking at shorting these coming back down. My humble opinion, Alan, we just looked at the history of gold, and it really hasn't broke over 2000. And the history of this chart, which goes back 10 years, a decade, so it hasn't broken 2000. So again, this chart goes back to all in the 2000s. It hasn't broken above 2000. So I wouldn't expect it to. That's going to be pretty heavy resistance. There's some Easy Mike likes, recommends. Thank you all for sharing. And he mentioned, as I said, GDXJ as a junior miner on gold. And then we've got some of the other metals. We've been watching opportunities in palladium. It ran up a little bit. You see the others are high. Copper's high. I don't know a way to short copper. Out of the other commodities are pretty volatile. Lumber bounced up. We see, we were looking at that a couple weeks ago. It still wasn't relatively low, but it's bounced up. And then here's the treasuries. So again, we saw treasuries run up on the decrease in yields, a little bit of an adjustment on Friday. But again, these treasury yields are going to need to compensate for the Fed interest rates, and I expect prices to decline. Probably, when the Fed comes out with their next decision, we'll see a drop in price and a increase in yield, and then they'll normalize. And again, we see this steep decline in the dollar. So again, that gives a boost to all the dollar-denominated commodities, gold, silver, oil, natural gas, etc. Any dollar-denominated commodity is getting a boost from this decline in the dollar. So, and we see other currencies as well. Yeah, we can look at that again tomorrow too. But one of the kind of basket ETFs to play agricultural products is DBA. So thank you for sharing that as well, Easy Mike. Okay, let me grab another drink. My voice is a little scratchy. I apologize today, and then we'll talk about our strategies for how to trade the January effect in 2023. Okay, so again, let's talk about the January, our strategies. How do we make money trading the January effect for 2023? Again, I've referenced this standalone video so you can get more information about, what is the January effect, where does it come from, some of the strategies that they um, talk about in various articles. If we want to see how we're doing relative to the January effect, I put this link in our notes to where we can see in investing.com how the major indices are doing so far this January. So if you go to the major indices tab in investing.com and you hit the performance tab there, we can see how global indices are performing for the day, the week, the month, year to date. If we want to see, since we're still in January, if we're having a January effect, right now we can see all the major indices are positive year to date. We see small caps as outperforming. Again, that's something that is traditionally, historically expected as part of the January effect. So again, right now we're seeing, it looks like we're going to have a January effect. We still got half the month to go. But again, right now, here's how we can see the performance of the indices for, month to date, year to date, etc. So we see the major decline in the VIX recently. So I hope that helps. Yes, gold is traditionally viewed as a hedge against inflation. Um, and it does get a boost when the dollar drops, so it's going up. Again, it's got heavy resistance at 2000, and you're starting to see at least fears of inflation are abating somewhat. So again, that you know as it approaches 2000, I think we're going to see increasing resistance in gold. Now, maybe again, there's more room to run in silver, so there may be an opportunity. And silver is also viewed as an inflation hedge. There's also some tailwinds to silver relative to EVs and solar, etc., because of the conductivity and the price of silver. So again, there's some other industrial uses of silver that should give it some tailwinds as well. Just another quick reminder, we're still within the window of the wash sale rule. So anybody that did tax loss harvesting towards the end to middle to end of December, you're still within the wash sale window. So please be aware of that. Don't invalidate your tax loss harvesting by violating the wash sale rule. And again, if you need individual advice in this area, we recommend Mark J. Kohler. That's who we use, and you can find our links to Mark J. Kohler in these notes and also on our homepage. Also, all these links to all these tools, resources, etc., you can find in the links section on our homepage, beachbumtrading.com. Again, you can find the links to Mark J. Kohler, to all their trading platforms, investing.com, etc. This is my quick reference to get to all the tools that I use for my trading. Another strategy for trading the January effect is we talked about the part of this January effect being that the underperformers from the previous year tend to start outperforming in the next year. So if you wanted to find, who's cheap right now, and in terms of mid caps, small caps, etc., we've got a couple of videos of how you can screen for some of these. If they underperformed last year, they're going to be close to their 52-week lows, etc. But again, you want to find the ones that are profitable and they're of good value. You don't want unprofitable stocks in terms of any kind of swing or any kind of long-term hold. Now, day trading's a totally different story. You can day trade whatever is running. That's momentum, etc. If you're not going to hold it, then essentially you don't really care what the stock is or its fundamentals. But if you're going to swing it for any time period or hold it for any time period, you're going to want something that's a good value, profitable, and not going to get hurt by inflation, increasing interest rates, or recession. Also coming soon, we've got a video on the January barometer, which tells us, based on how January goes, what does that tell us in terms of how this year is going to go? And again, we'll come out with that soon, and we'll probably talk about that in subsequent weekly trading game plans. So I quickly want to show you also, we've talked about dividend stocks, so I quickly want to show you how you can find dividend stocks and dividend paying ETFs in FinViz, and then we'll probably do this as a standalone video in the near future. But if we jump over to the screener in FinViz, if you're looking to get some dividend stocks to hold, collect dividends, and you want them to outpace inflation, etc. You can see if I go to just the screener, the first tab that comes up is the descriptive tab, and under here we've got dividend yield. So we can select, what dividend yield do we want, just any, if we select greater than 0, it's going to be anything that has a dividend. And you see we end up with, 4,000 stocks that have a dividend of some kind. If we want something that has a 5% or better, which again is still a little under inflation, but it's better than a treasury right now, then we end up with 1,000 stocks still. If we want to go and beat inflation, then we can say, okay, show me those that have a 10% or better dividend yield. And now I'm down to 338 stocks. So then you can sort these in various ways. You can filter them down by sector, by industry, etc. Again, you can sort these by, if you want financials, basic materials, etc., energy, you could filter them down further. You can look at their fundamentals. So again, I hope that helps you identify. So again, then you could sort by industry as well. So if we want to see just exchange traded funds, we could do that. So now I've got just ETFs that have a 10% or higher dividend yield, and now I'm down to 69. So again, then within that, you can pick out whichever, one here's biotech or whatever, filter them out further. You can see the price, performance, etc. So again, I wanted to show you, a way to find dividend paying stocks if you're looking at something to hold, with increasing interest rates that will beat treasuries, beat the Fed interest rate fund. If we end up in a recession and you are holding something, at least these will pay you while you hold and wait for the markets to recover. So another question for our BeachBum trading community is, I also, out of my database, I have a query that I can pull the dividend paying stocks that I have. One thing I noted in this screener is it doesn't have the ex-dividend date. That's something we recently added to our automatically generated watch list for our Patreons. I could create a Google Sheet with that query data and also automatically update the ex-dividend date. So please reply if you would be interested in such a thing, if that would be of added value to our BeachBum trading community, if we had a dividend Google stock or Google Sheet that had the dividend yield information, etc., as well as the ex-dividend dates. And even I think we could put payable date, etc., if we wanted to. So let me know what you think of that. If you want also more information about dividend paying stocks, let me know what you're interested in those regards. So very quickly before I wrap up, I've been talking about that we're rethinking our options trading strategies, um, particularly because the probability of getting assigned early doesn't seem to be very high. So I'm again rethinking this. So I'll be talking about this in more detail as I figure this out. Um, what I'm considering right now in terms of criteria for selling cash secured put options is, I want a company I wouldn't mind owning if I do get assigned, or owning, even though the probability is low, or it appears to be relatively low. And again, I'd love to hear your experience in our Discord posting, etc. How often have you seen early assignment of in the money options? The feedback I've gotten so far is that the probability is relatively low, so I'm trying to adjust accordingly. Again, so I want stocks I wouldn't mind getting assigned owning, which means, no crappy stocks or zombie stocks, because I don't want to get stuck with those. Um, I have a target buy price in our database for these various companies in our universe. So I'd probably use a strike price below my target buy price, because otherwise I'd want to buy it there anyway, or a support level, a pivot point. So I'm looking at those. I'm doing research on the wheel strategy, and you'll see some videos coming out on the wheel strategy, what I learned from that. But based on that, they're recommending a 30 to 40 day window for expiration date. So I'm targeting that. Welcome, Tony Roses. Thank you for joining us. Glad to see you. And yes, please rewind to the beginning. Hear the rest of our analysis. Trying to figure out the return on invested capital. So I'm looking at, formula based on the premium received relative to the share price, possibly normalizing that to a daily basis. And then, how far from the strike price do I want the current stock price to be? I don't know. What kind of delta? One of the recommendations was a 30.3 delta or less. That means the probability of it getting in the money is 30% chance or less. Again, these are variables I'm trying to figure out and maybe do some testing on. And I'd love to hear your feedback. Again, I have a posting in our Discord. Again, our Discord's free to join. You can find the free invite in the description box below, and I'll throw the banner up as well. And please, reply in our Discord under the options channel. So we have a channel for various asset classes. And under the options channel, if you reply to these topics on, how do you determine the best stocks against which to sell a cash secured put? I'd love to hear your feedback. What do you think of these variables? Do you have other variables that you would like or you think should be used? Let me know. Again, this is all evolving. I'll talk about some of the trades we've made in options and cash secured puts this week. And then we're trying to come up with a kind of watch list of things to trade similarly, because again, I find this strategy is potentially profitable if the market's going to be choppy, as it has been. This is a way to make additional income by trading options. So, and relatively low risk options. So finally, if you haven't posted and shared your New Year's trading resolutions, please share them in our Discord and our Facebook group, etc. So our BeachBum trading community can help you achieve your New Year's trading resolutions. And again, we hope that all helps. So if anybody has any last minute questions, I throw them back up in the chat. Otherwise, we hope you'll all come back for part 2 tomorrow, same bat time, same bat channel, 10 a.m. Eastern time, every Saturday, Sunday. We do our weekly trading game plan, and we'll apply all this data, all of our strategies, everything we know about the January effect, and we'll select individual stocks to put on our watch list in our bullpen, in our shopping list, etc. So again, we'll talk about additional ways, specific ways to make money trading the January effect in 2023 and which stocks. So we're looking at trading for the trading week coming up on the 16th through the 20th. Again, just a reminder, markets are closed on Monday for Martin in observance of Martin Luther King Day. So we got a, somewhat shortened trading week again. Okay. So thank you all for joining us. I hope you all will come back again tomorrow for part 2. Otherwise, have a great rest of your Saturday. And Alan's asking, can we see how many options are shorting or calls? We can talk about open interest. I don't know if you're asking specifically for me or for open interest in general. But again, we can talk about that more tomorrow as well. Other variables relative to options and where you can see that, and also how we might utilize that to select particular stocks to trade options on, strike prices, expiration dates, etc. So, okay, thank you all for joining us. Have a great rest of your Saturday, and I hope we'll see you tomorrow morning.